reported a first-half pre-tax loss of £23 million and warned of a slow start to the second half of the year. The British retailer says sales were hit by unusually warm weather, weaker demand and competitor discounts. Meantime, Imperial Brands says its CEO Alison Cooper will be stepping down after 9 years in the role once a replacement is found. The announcement comes a week after the tobacco company cut its revenue forecast, blaming the US crackdown on vaping. The stock goes slightly higher. Big week for resignations, though, in the C-suite. Just the latest. Jeff.
Thanks very much indeed, Karen, for that. Let's get back to the conversation around the desk. Ben Jones is with us, Senior Multi-Asset Strategist at State Street Global Markets. Ben Jones is here. Well, I just mentioned that. I don't know why I said the autocue twice. That's clever. So they try and trip you up like that sometimes. They're a rump bunch here, I have to tell you. Ian Hartnett is also here, co-founder and chief investment strategist of Absolute Strategy Research. Ian Hartnett is here. A couple of markets that I think our audience is really very interested in at the moment. Russell was tweeting me earlier and said, Japan, buy, sell or hold. Gentlemen, what do we think?
So interesting. Japan has been our favourite underweight all the way through the course of this year. And I think the one thing that sort of shifted was the GPIF comments a couple of days ago. So the announcement that they're going to reclassify some of these overseas bonds that are currency hedged from international bonds into the domestic bond bucket. It's about 1.2 trillion, it's about $12 billion worth. That was, I think it's a surprise and interesting how they can reclassify it, but they are going to do that. What that allows them to do is obviously buy up more bonds around the world. That probably is very good for BTPs and very good for Spanish bonos, because even on a currency hedged basis, you're still getting a pretty decent yield premium over JGBs. But what it has also had the effect of is something that the BOJ has been unable to do, and that is steepen the yield curve. Now, if that can be sustained, then that's something that can finally help Japanese banks perform a little bit better and hopefully help the Japanese index. Now, we know that Japanese equities are deeply undervalued, but they've been there for a very, very long time. So perhaps it's time to see a little bit of that value being realised.
Do you buy the topics or do you buy the Nikkei?
I think you probably buy the Nikkei a little bit. I mean, I think one of the other implications of this GPIF move is potentially a little bit of upward pressure on euro yen as well. I don't think it has a big impact on dollar yen necessarily, but I think just a little bit of yen weakness that will help the Nikkei a little bit.
And, our view on Japan is that we have been overweight because we see it as a useful hedge against a US overweight in portfolios. I think our concern about a world in which you have a debt issue, particularly around corporate debt, Japan's got the lowest corporate debt ratios of any market. So, if there is a debt issue, people are going to say, who's got least debt? They'll go to Japan as a safe haven. If we're wrong, then, you can lever up Japanese institutions. Their ROEs are already up to Eurozone standards. If you were levered some of those Japanese companies, you'd actually get them up to US ROEs. So, we see it as a good two-way hedge, actually, at this stage, Jeff.
Pay more to know more in terms of the FTSE, or would you dip your toes at these levels?
I think you'd be quite brave at the moment. I mean, I think if anything, you probably want to be slightly overweight UK equities, but I wouldn't have a sort of table-pounding confidence call in it. That's really because I have a slightly negative view on sterling. I think the risk of crashing out is not fully priced into sterling. You get sterling weakness, you get UK equities, large cap at least, UK equities outperforming in that environment. But I think, to be honest, a lot of people are just sort of sitting back and sort of watching the political machinations unfold and saying, well, it's impossible to take a very strong convicted view on what exactly is going to happen. I'm certainly not going to try to do that. So I would say it's sitting on the fence, I think, with UK assets to most degree.
We'll take that. Ben, thanks very much indeed. Ben Jones, Senior Multi-Asset Strategist at State Street Global Markets. You're going to stay with us, Ian, so we'll be back in just a moment.
Plenty coming up on the show, including problematic points, a careful response from the European Union after the British Prime Minister makes his final Brexit offer.
Right now on CNBC Make It, can giving up coffee...
UWE Bristol thinks your child's next step should be an exciting one, and that it should start right here on this Thursday morning, when you register them for our open day. Then, on the 5th of October, in just 2 days, they'll come and discover that UWE Bristol gives them more than a university with state-of-the-art facilities, more than academic support to help them thrive. more than real-world connections with practical experiences that complement their studies. And more than a city with the buzz of Bristol. Help them choose more than a degree. Choose a 360-degree experience. To register them for an open day, search UWE Bristol today. After that, anything is possible.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen. With amazing savings on Samsung fridge freezers at Currys PC World. Like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser. A huge 609 litres of storage space. At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
I want Poppy to play cricket for England.
I want Sam to stop screaming.
I want Joe to live a little.
I want Naomi to live a lot.
I want Becky to invent a cure for the common cold.
Whatever the future holds for your children, Vitality Life Insurance want to make it happy, healthy and secure. So when you take out our Wellness Optimizer, you'll get up to 40% off your life insurance premiums.
I want the twins to keep on being happy.
I just want whatever the twins are on.
Just search Vitality Life Insurance. Additional product, minimum monthly premiums and conditions apply.
Welcome back, everybody. The headlines. The US hits the EU with tariffs, widening the trade war after the WTO gives Washington the right to put levies on $7.5 billion worth of European goods in a long-awaited case.
All of those countries were ripping off the United States for many years. They know that I'm wise to it. We've had a lot of wins. This was a $7 billion win. Not bad.
But French stocks breathe a sigh of relief. Airbus rebounds. Luxury goods brands like LVMH trade higher as Washington spares champagne and leather goods from the list. The sell-off momentum appears to be losing steam after Wall Street logs its biggest one-day decline in nearly 6 weeks as trade tensions and weaker than expected jobs data in the US fuel growth worries. And UK Prime Minister Boris Johnson makes his final Brexit pitch, offering a compromise on the contentious Irish backstop. But the proposal receives a tepid response in Brussels.
There is progress, but to be frank, a lot of work still need to be done to reach and to fulfill the three objectives of the backstop.
Stock markets here in Europe have been trading for half an hour so far, the exception Germany, which is not trading today and out of action. But you can see the outlier on the boards already. It's the FTSE, trading down by about 1/3%. It's cracked through the 7,100 mark in this intraday session, so well and truly off the highs that we've had on the back of what has been a string of negative sessions. Now the fourth consecutive trading session in the red. Yesterday, you thought we might have been done with the red ink when we saw a very large percentage and point decline. In fact, the largest drop we've seen on a point basis since the 24th of August 2015. So in historical context, we have seen fairly significant dip. Investors closely eyeing the Brexit developments, trade implications as some UK goods are caught up in the retaliatory list that's been drawn up by the Americans. And of course, all eyes on the macro here, the impact for the UK economy. So what we've got across the board, in contrast, some green splashing up on the boards. Some of this seems to be a relief rally. The tariffs could have been worse from the Americans, particularly seeing that in the French market 4/10 north, the Italian market not far behind. So decent percentage numbers on the back of what was an incredibly weak session for European markets yesterday. The Stoxx Europe 600 having its worst trading day of 2019. So it might just be a little bit knee-jerk to the upside in reaction to what was an extremely weak session yesterday. Let's just take a look at that FTSE heat map, and you can see which stocks are leading the charge lower and what is providing some support. Along the bottom line here this morning, the likes of BP down 1%, Barclays shedding 1.2%, and Sainsbury's in the retail space 1.3%. Got to say, a big collection of various stocks and various industries. Along the top part, you've got Ocado showing a little bit of appetite. HSBC and the likes of Burberry, strong trade on Burberry this morning. I've got to say Diageo also in that mix. So it seems like, as we're saying, a little bit of relief around some of those stocks that could potentially have been caught up even more in the tariff changes from the Americans. A very wide-ranging list initially drawn up, much more narrow focus in the ultimate finished list that they delivered to the European Union. Jeff.
Thanks very much indeed, Karen, for that. A compromise, that's what British Prime Minister Boris Johnson is calling his new Brexit proposal, which he laid out in a 4-page letter to the EU. The plan gets rid of the backstop and replaces it with an all-island regulatory zone and electronic customs checks away from the border, following a phone call between the Prime Minister. European Commission President Jean-Claude Juncker welcomed the, quote, positive advances, but also noted problematic points. Let's get out to Willem in Brussels, who's got a guest with him on this topic.
Yeah, that's right. I'm joined by Marcus Behrer. He's the Director General of Business Europe, and we want to talk to you about both Brexit and that WTO ruling yesterday. Let's start with Brexit. We've got these new proposals. They've been delivered just here yesterday afternoon to the European Commission. As a representative of business across Europe, what most concerns you at the end of October? Is it presumably no deal?
Well, I think the business community on both sides of the channel has been very clear. We must avoid the no-deal scenario because this is a recipe for disaster. Many people talk about cliff edge, which sounds like a clear-cut solution. But I think our British friends are right to talk about a swamp. This is something which would hinder us in our future relationship dramatically, and it would be a disaster for the economy on both sides.
If we end up with a situation where the two sides don't reach a deal between now and that deadline, and if for whatever reason there is no extension to that deadline, can you just explain to viewers what that means for trading relationships into the future? Because obviously things will change very dramatically on that date, but it's not as though things will suddenly be resolved down the road either.
Well, I think we need to avoid this no-deal scenario at all price, because what it would mean tariffs, high tariffs, it would mean border control, it would mean disruption of value chains, and it would mean that all the topics we have not solved would stay at the table, but we would need to negotiate in a much more difficult environment. So this is a recipe for disaster, and we really must to avoid it.
Let's talk about the details a little bit, because of course the British Prime Minister calls this a compromise, this proposal. Do businesses think that the European Commission, European member states, could perhaps compromise a bit more in order to try and find a deal? Do you think they need to?
Well, I think it's too early to really assess this proposal, and we are still in the middle of assessing it. There seems to be one or the other question mark, but let's hope there is at least the possibility for a start of talks. So too early to tell.
Okay, let's ask about the WTO ruling then. We've clearly heard from the US Trade Representative's office yesterday. They are going to look to impose tariffs as soon as the second half of October. We've been shown a list of the items that will potentially taste these tariffs, and we're talking about quite a large number of items from quite a number of member states. From the perspective of businesses across Europe, how much is this going to damage their prospects, do you think?
Well, I think, first, we, of course, very much distinguish between WTO-conform and non-conform measures. And this one is based on a ruling which needs to be acknowledged. But having said this, we still think, and insofar I agree with the Commissioner, it's short-sighted and counterproductive to impose tariff on each other amongst partners. There is this case with Airbus, there's the case with Boeing, which will follow. And it's certainly not a smart way to impose tariffs on each other. It would be better to sit down and to find a negotiated solution for which the EU has made proposals. So this would be the much smarter way. As the European business or economy is concerned, of course, this will have quite some impact. The list does not go to the maximum tariff possibilities, but at the same time you can see that a broad number of SMEs will be hit across the continent. Many SMEs who have nothing to do with airline industry, and therefore, certainly not a friendly act.
You talk about the SMEs across Europe. Do you think that there are certain member states that will look at these tariffs on some of their small, medium-sized enterprises and think, we need to move much more quickly to respond? And do you think there's a chance, therefore, that by targeting certain industries in certain countries, there will be splits amongst European member states about how to respond to this?
No, I think Europe needs to be united on this. Of course, it is unfortunate, and again, I would say short-sighted and counterproductive to impose tariffs in this case, even so WTO conform. And again, there is many companies, especially SMEs, hurt, which are not in the airline industry. But at the same time, we believe that we need to find negotiated solutions, because at the end of the day, it's in the interest of the US economy and of the European economy to find a feasible solution which can also serve as a gold standard we will be able to bring to the WTO table.
Markus, we'll leave it there. Thank you so much. Vielen Dank. That's Markus Behrer. He is the Director General of the Advocacy Group across Europe, Business Europe. I'm going to hand it back to you guys in the studio.
Excellent. Thanks very much indeed, Willem, for that. Ian Harnett is with us, co-founder and chief investment strategist of Absolute Strategy Research. Just very briefly here, as we look down your asset allocation approach for investing into the recession, cash, clearly understand that. Bond returns, I think we can figure that one out. But in terms of real assets, not infrastructure, interestingly, but real estate.
Yeah,
it's pretty pricey, though, isn't it? Real estate.
I think it is the relative valuations of real estate compared to some of the infrastructure stocks and the crowding that we've seen. There are many fewer infrastructure plays in many ways. So I think you've seen more of that crowding in that environment, Jeff, is the thing we're worried about. And potentially you get more leverage in terms of, for a given decline in bond yields, you get more upside in some of those real estates. So, our sense is that, people are still worried about the scope for real estate prices to come down, the actual asset to come down. But, we think that the REITs will actually hold up relatively well in this environment.
Yeah, just to mention, UK Prime Minister Boris Johnson is to give a statement on the Brexit proposals at around 11:30 London time to the House of Commons. This report coming from the Labour Whip's office at this point, but I think I have seen other sources for this, so we'll look out for that statement later on in the day. The Europeans are having a close look at how much credit banks are extending into the property market at the moment. We've seen these very strong Eurozone property market gains. At these very low rates, some of the banks have been relatively generous, it seems, in terms of their mortgage books. Is that something that you need to be wary about?
It's something that the ECB and the systemic board have highlighted. It's a number of key countries. Netherlands, Belgium, Luxembourg have been the ones that have been particularly highlighted. But also, I worry that it is the French that have been doing a lot of this lending. The French banks have been responsible for over 50% of all the bank lending in the last 5 years, and more than 50% of all the leveraged loans that have been originated in the Eurozone in the last 5 years. So, whilst we see some of the French economic activity numbers looking quite healthy, I just worry that it's actually a debt-fueled binge, and, but some of that has gone outside into the real estate markets. And this is non-productive capital. So I think that's the bad news, which is that the debt that has been funneled through these low interest rates into real estate, into residential and to commercial real estate, it's actually not building the productive potential. And this is maybe why we're seeing some of those productivity numbers looking down.
They capture even more negatives than that. I mean, you've got the credit excesses that go into that. And if there's a strained consumer, if there is a sort of downturn in the economy, then that impacts the ability to repay. Not to mention the fact you've got big structural changes, shopping centres, the experience, people not going into the stores anymore. H&M, for instance, downsizing one of the big shop space operators on the high street. In addition to that, even if you go into the office space is changing. WeWork, for instance, disrupting the environment where you've not got employers taking out huge office space over long duration anymore. So there's a lot of negatives.
So I think, as we were talking earlier, in a downturn, nothing escapes. And the question is, where do you make...
That's not just a downturn, that's structural change.
But I think, structural change takes place slowly over time. Cyclical adjustments take place more rapidly, I would be concerned about, Karen. But you still get some of that rental income that's coming through. I think some of those business models like WeWork are actually failing is really important, because it's telling you that the markets are no longer willing to extend capital to companies that aren't making money. And these cash burners, as we call them, are just being absolutely killed at the moment. So I think it is about, trying to make sure you're looking at the quality end of markets, watching those cash flows, because it's actually going to be cash flow that determines, which are the winners and losers here. And that's going to be true even in the retail, in the real estate space.
What do you think the reaction is going to be to the WeWork story, Peloton, the series of failed IPOs, whether it's failure on listing and the stock price falls, failure to even come to market? Does that mean private equity just steps up? We're not going to see as many IPOs at this point, and all that dry powder suddenly gets put to work, but at lower valuations than what we're seeing in the private market?
Well, I think it comes back to that point you made. It's about lower valuations. And one of the things that we're emphasizing is that valuations are still well above their 10-year averages, particularly in the United States, but even in the world ex-US, you're only back to where you were. Historically, if you go into downturns, you need to see a big discount on those valuations. And I think this point about the fact that we aren't managed to get these IPOs away, although there is a lot of liquidity at a stock level, the rate of change of liquidity isn't that dynamic. And I think this is just telling you that that dry powder, if it's there at all, is sitting on the side for much better deals.
You can get better deals in the public markets than you can in the private markets at the moment if you're a private equity investor. I see a bit of arbitrage going on in that space. Is there not an argument that private equity money is actually going to come in as a support to these equity markets, particularly if they see businesses that have good cash flow, but actually at this point are maybe not growing their top line much?
Yes, and so you might see some of those, companies being taken private. But again, it's normally, it's what this paradox of, wanting to look over there without recognizing that you're only going to do that when that stock has been hit 30, 40, 50%. So like perhaps Ted Baker today, something that gets a really big hit, then you might attract some of that bargain hunting from the private equity companies, and rather than just seeing those share prices drive down and down and down.
It appears that most people went on holiday to Italy. Italy's services sector growth accelerates slightly in September, according to the PMI data here. The PMI rising to 51.4. The forecast was for 50.4. Quick comment. Italy?
It's actually been one of the areas that's, on our activity surprise numbers. The Italian numbers have actually held up very well. I think we are seeing some stabilization after the political uncertainty that we had. And, they're also one of the beneficiaries from these very low interest rates. So, I think that, that's been one of the key surprises. Remember that, a lot of the Italian debt as well is still, yielding more than zero. So for the Italian market, thinking about the market implications, Jeff, actually I still think that Italian debt is probably a buy here.
I didn't think all of my Italian pizza purchases over summer would have that much impact, Jeff, but hey, there you go. All those margarita pizzas. Coming up on the show, Libra members attend a meeting in Washington, D.C. amid scrutiny from regulators and even reportedly from within their own ranks. More on that next.
Technology only matters if it makes a difference in the guest experience.
Fort Knox with John Fort. Subscribe to the podcast now.
With the money I've made on Poshmark, I've been able to pay for all our family's vacations.
I could pay for my wedding just on what I've made from Poshmark.
I've made over $10,000 and I was able to buy my new car.
Download the free Poshmark app now.
Hi, I'm Joan London. Today's senior living communities have never been better, and nobody understands your options like the advisors at A Place for Mom. A Place for Mom is a free service to help you find a place that fits your parents' budget, needs, and personalities. Call today. A Place for Mom. You know your family. We know senior living. Together, we'll make the right choice.
Call A Place for Mom to get your free ebook on financing senior care. Call 1-800-536-7580.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-997-2117 to receive your free Carefree Dental Card information kit.
Either of you ever invented anything before?
Nothing.
We went from 5 employees to 500. Strange Success with Jane Wells. Subscribe to the podcast now.
We followed Steph Curry and Under Armour from Hong Kong to Taipei to tell the story of how Under Armour is trying to take their brand global. Curry is their ticket.
Under Armour basketball, he's like, give it to me. I got this.
Our schedule here is crazy. We're going till 4 a.m. This really is the essence of what we do. It's business meets basketball. You will not see this on any other network because we got the exclusive access.
The American spirit. Inherently competitive. Always driven with an appetite to succeed. Perseverance is paramount. Knowledge essential.
Good morning, everybody. Welcome to Squawk Box here on CNBC.
That's what drives us. It's in our DNA to provide the information you need to propel your dreams forward.
Welcome back. As you come back to us, we're just waiting on the French PMIs, but we've had comments from the ECB. I'll get to the comments from the ECB in just a second because we do have those French numbers. So let's do those for you first. The market September composite PMI in at 50.8. 51.3 was the number for August. A reminder, 50 is the important number that indicates growth or contraction. Anything above growth, anything below contraction. 50.8, not far from that important line. The September services PMI in at 51.1. It was 51.6 in August. So again, that's just a little easier.
Yeah, I think, generally, thinking of the Italian numbers accepted, we're seeing this downward shift somewhat in the Eurozone economic activity. I think that maps into the, the US picture as well. Generally, we see this softer tone coming through. And I think it's going to be quite tricky to maintain a more dynamic growth profile at this stage.
And as I say, we've got a lot of European faces out there this morning talking to the market. Mr. De Guindos over at the ECB saying the Euro area risk outlook is again tilted to the downside. He says it is thus of utmost importance that we enhance the firepower of Euro area stabilization policy by means of a, quote, policy mix. As part of that, he says, laying institutional foundations for a European fiscal response, or capacity, as he calls it, would be an important step in this direction. We know what we really need, don't we? And that's some kind of fixed income product that represents the Eurozone, but without a proper treasury function. How can that exist?
I think that, it's the old story about you get the right answer, but only after you've exhausted all other possibilities, Jeff. I think about a decade ago we wrote, what will you need to see before you get to the end of the crisis? And it will be that we have Eurozone bonds, but you'll only get that once we get the monetary side exhausted and, those zero yielding bonds are only 60% of the Eurozone market at the moment. In Japan, they're close to 99%. So we've got further to go there. And it's only after we've exhausted these things that we'll see the more aggressive fiscal policy coming through. In the meantime, it has to be the Germans that permission that. But maybe we'll get a split between the CDU and the SPD at the end of the year. The Greens come in and you get a bit more green infrastructure spend and a bit of fiscal expansion that way. But at the moment, it's still not going to be enough to turn the dial on European growth if we get a global slowdown.
It's funny, we talk about the system as though it's not changing. Maybe there's going to be disruption to monetary policy. And this from our next story around cryptocurrencies. Policy executives from the consortium behind Facebook's controversial cryptocurrency project will attend a meeting in Washington, D.C. today. That's after the tech giant's top Libra executive denied reports key founding members were wavering in their support amid scrutiny from regulators. Elizabeth, this is a fascinating story because it seemed as though Libra had momentum. Maybe some of the momentum is stalled. The big impact is for central banks trying to determine whether cryptocurrency could undermine the monetary system.
No doubt about it. This is a story beyond just this effort that's been led by Facebook to establish a digital currency. This is a whole system-wide change in how currency is viewed. And ultimately, what this Libra initiative has really done is triggered a broader conversation about digital currencies, both within the existing banking system and from disruptors like tech companies. So what's happening today is a meeting in Washington, D.C. with some of the members of Libra. They're, essentially meeting today, and then in a couple of weeks in Geneva. The Libra Association is this organization that's Geneva-based that's been tasked with overseeing this project, and including 28 founding members initially, companies like Facebook, but then, of course, a range of other companies, including Visa, MasterCard, Uber, Stripe, Spotify, quite a wide range of companies involved in this. Notably, no banks part of this initiative so far. So what's happening is they're looking at taking the next steps. In Geneva, they're expected to vote on the board of the Libra Association. The Libra Association, Facebook has said they continue to want this proposed cryptocurrency to launch in 2020. There's been certainly a good amount of pushback that we've heard from regulators, concerns around security, money laundering, terrorism financing, that could delay that a bit longer. And the question is exactly how that's going to play out with these concerns.
Another one to throw onto the list of concerns, just going back over the Bank of Canada's comments, because they've done a lot of the work for a central bank, and they were saying what is sold as a decentralized solution is in fact highly concentrated. So again, another problem, if we talk about a Facebook, that would be a concentration of crypto assets on one platform.
Yeah, and I think that is, one of the issues that governments are going to have here about this. But I think there's another angle, which is that, all of those companies that you named there, Elizabeth, are global corporates. And I think one of the challenges here is we're seeing global corporates taking on national governments. So national governments often are the originators of their local currencies. They're now seeing this challenge from these global corporates. And I think this is symptomatic of a much bigger trend about, have we got that challenge at the current time around, national sovereign policy at the time where we're seeing these global corporates saying, actually, we can do this for you. And do consumers trust their global counterparties more than they trust their national institutions? So there's a whole range of different dimensions to this narrative that I think the Libra initiative has opened up.
Let's give you the German PMI data. German September services PMI 51.4. August was 54.8. The forecast was 52.5. That is weaker than the expectation. If we round this all up for you, the Eurozone PMIs we've seen here suggesting broadening weakness at the service sector. Ian, thank you for being our guest host this morning. Elizabeth, thank you for coming and telling us about Libra. And thank you for tuning in. We'll see you tomorrow. Bye-bye.
The CNBC app has new features.
Get ready for Brexit on the 31st of October. If you buy items from EU suppliers or sell to EU customers, there'll be new requirements affecting businesses of all sizes. You'll need an EORI trader number and know how to make a customs declaration. You'll also need to make sure you have the right supporting documents for the goods you buy and sell. Find out more about how to prepare. Follow the step-by-step guide at gov.uk/Brexit-traders.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests,
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
The 1304 LNER train, Coach C. Taking aunties with cold hands to nephews with warm cheeks in Edinburgh. Remorseful revellers back to their beds in Leeds. Business mums gliding over the Forth Bridge towards a door in toddlers in Newcastle. And a band heading to London to our group of strangers in a tiny pub. This is us. These are our journeys. This is our LNER.
It's Liz Hernandez with your TuneIn Music News Update.
Perez Hilton says Halsey is dating American Horror Story actor Evan Peters. In 2012, she tweeted, "Evan Peters, stop making me attracted to alleged sociopaths and accused murderers." Then in 2014, Halsey posted, "I'm so in love with Evan Peters. I'm so whipped." Meanwhile, Ed Sheeran tells People magazine that he's always shooting for the top. Ed says, "If you're a basketball player, you should aim to be better than LeBron James. You have to aim for the top." To hear music from Halsey and Ed Sheeran, search today's hits on TuneIn.
This week on the New Yorker Radio Hour, I'll talk with Senator Cory Booker, who's looking for a breakout moment in the crowded field of presidential candidates.
This presidential election is not a referendum on one guy in one office. It is a referendum on who we are as a people and who we are to each other.
Listen to this episode of the New Yorker Radio Hour on TuneIn today.
Good morning and welcome to Street Signs. I'm Juliana Tattlebaum and here are your headlines. The global sell-off loses steam with only the FTSE in the red after Wall Street logs its biggest one-day decline in nearly 6 weeks. The U.S. hits the EU with tariffs, widening the trade war after the WTO gives Washington the right to put levies on $7.5 billion worth of European goods in a long-awaited case.
All of those countries were ripping off the United States for many years. They know that I'm wise to it. We've had a lot of wins. This was a $7 billion win. Not bad.
But French stocks breathe a sigh of relief. Airbus rebounds while luxury brands like LVMH trade higher as Washington spares champagne and leather goods. And UK Prime Minister Boris Johnson makes his final Brexit pitch, offering a compromise on the contentious Irish backstop. But the proposal receives a tepid response from Brussels.
There is progress, but to be frank, a lot of work still need to be done to reach and to fulfill the three objectives of the backstop.
Well, a very warm welcome to Street Signs. We're just getting some fresh data out of the Eurozone. We're crossing the tape now, so let me bring that to you first and foremost. This is the Eurozone final services PMI and composite PMI. So starting with services, the final number for September has come in at 51.6. That's versus 52 in August. The final composite number has come in at 50.1 versus 50.4 in August. And this, of course, follows those pretty dismal final manufacturing numbers out of the Eurozone, which we already knew. The final manufacturing PMI for the Eurozone fell to 45.7 in September. That was the lowest level since October 2012. So manufacturing continues to be very, very weak. And to have a look at the euro in response to these numbers, the euro currently trading about 0.15% lower versus the dollar below that 110 level. Now, to get a quick reaction to these numbers, let's bring in Thanos Vikides, global head of G10 FX strategy from Bank of America Merrill Lynch. Thanos, a quick take on these numbers. You've got the final composite now in for the Eurozone, 50.1, so a touch in expansionary territory, and the services PMI, 51.6. So what do you make of these numbers and sort of your overall view on the European economy at the moment?
Overall, the Eurozone data remains very weak, particularly in manufacturing, and particularly in economies that are exposed to international trade, so that are affected by trade tensions, and to China. As we have seen, Germany is the country with the weakest data. Italy also has weak data. Services, they are affected by what is going on, but obviously manufacturing is a sector where we see a clear recession. So looking forward, all this suggests that for the Eurozone data to improve, we need to see some progress on trade tensions, and unfortunately, things seem to be getting worse there.
Especially today, just 24 hours after that WTO ruling. Well, we're going to leave it there, but we have plenty to discuss later in the show with Thanos. But pushing on the tariff front, the U.S. government has announced it will impose tariffs on up to $7.5 billion worth of EU exports. The move comes after the WTO found the U.S. was entitled to retaliate against the EU's subsidies to Airbus. And taking a look at markets at the moment, just bear in mind that German markets are closed today. We're seeing a bit of relief come through the markets this morning, in particular in France. You've got the CAC 40 up about 0.4%, but more broadly, we're seeing gains for the Italian, Swiss, and Spanish markets as those tariffs came broadly in line with market expectations, perhaps less aggressive than feared. So that's the narrative coming together in Europe this morning. But bear in mind, of course, this comes after heavy losses yesterday with the Stock 600 ending 2.7% lower. That was the worst daily performance since December 2018 for the European benchmark. Now, President Donald Trump said the WTO's decision to greenlight the tariffs shows that other countries can no longer take advantage of the U.S. on trade.
The WTO has been much better to us since I've been president because they understand they can't get away with what they've been getting away with for so many years, which is ripping off the United States.
Well, let's go back to Willem in Brussels, who's been waiting for this decision all week. Willem, what has the reaction been like in Brussels?
Well, as you might imagine, ahead of the actual details from the US Trade Rep's office, we, of course, had that WTO ruling, and very soon thereafter, the office of Cecilia Malmström, the Trade Commissioner for Europe, issued a statement in which she said this would be counterproductive if the US were to pursue tariffs. We heard from Bruno Le Maire, the finance minister in France, that American sanctions would be, quote, an economic and political error. And since the US Trade Rep office came out with some of the details of the products they intend to target as soon as October the 18th, what I've heard from the Commission here and officials at the Commission specifically is that this was no huge surprise. This was more or less what they expected. They did anticipate that the US would seek to move ahead with these tariffs as quickly as possible. And just to give you some timeline on that, Juliana, we know that there'll be a special meeting called of a certain panel inside the World Trade Organization, the dispute settlement body. They will meet on October the 14th. And then once they formally adopt this ruling from the WTO arbitrators, it can become enforceable. The US saying they'll do that just a few days later. Jean-Claude Juncker, the European Commission president, he talked about the impact this would have on individuals across the European Union.
Trade is so much more than simply numbers. Trade is about people's livelihoods and jobs. Trade wars are easy to start, but escalate quickly and usually end badly. Whoever is starting a trade war will end badly in his own camp. Europe will always defend free and fair trade based on a level playing field and reciprocity. We will not be naive, but we are ready. willing and determined to business. And if someone is imposing tariffs on our aviation sector, we'll do exactly the same. Exactly the same.
It's worth repeating, Juliana, that the EU has said repeatedly for many months now they would like to see a negotiated settlement because they say both sides have been at fault historically when it comes to either subsidies or tax concessions for their aircraft manufacturing industries. A few months from now, we're expecting a ruling, a similar one, from the WTO against Boeing that would in theory give the EU the firepower, the capability to impose their own retaliatory tariffs on both aircraft manufacturing and, of course, other products. They've drawn up their own list in preparation for that. What's really interesting is going to be the timing, whether they wait until that ruling or try to move more quickly. If the US do indeed move ahead on October the 18th, the Europeans could use old WTO rulings, which were previously settled quite some time ago, as a reason to have this ability once again to impose their own tariffs. This would be quite unprecedented. This, though, remember, was the largest WTO ruling in history we had yesterday. But even though it's unprecedented, even though it would potentially inflame tensions, it would allow, Juliana, the EU to respond much more quickly. And some member states may want to see that to try and give them more leverage in any negotiations with their US counterparts.
Willem, very interesting and, as you say, unprecedented. But as we've seen numerous times this year, that doesn't necessarily mean it won't happen. Well, we'll leave it there. Thank you very much, Willem, for weighing in. Well, let's take a look at the French stocks, which are breathing a sigh of relief this morning as Washington spares some of those goods that were once thought to be on the tariff list. Let's kick off with Airbus, though. Airbus shares are rebounding about 3.5% this morning, so reacting well to the WTO ruling and the U.S. tariffs. Food and bev, let's take a look at those stocks. Those are also breathing a sigh of relief. We've got Diageo up about 1.7%, but Pernod Ricard, the big name there, up about 3.3%. And as you heard in the headlines, champagne was excluded, was spared from this tariff list that many had feared would be included. Let's move on and take a look at luxury stocks. We're seeing a bit of a bounce for most of these stocks as well, with the exception of Swatch and Richemont. Remember, we've still got ongoing tensions in Hong Kong weighing on the luxury sector as well. So it's not just about the tariffs, but looking at the reaction for those names that were spared, given that leather goods were not included on the list. LVMH responding quite well, up more than 1% this morning. Well, Charlotte Reed now joins us around the desk to help us understand more of what's behind the positive market reaction this morning to the news of the tariffs yesterday. Charlotte.
Hi. Well, first, you can say the overall amount is lower than expected, so that's part of the relief. And then for Airbus here, as you see at the top of the CAC 40, there's two reasons for that. One is that the tariff on Airbus aircraft will be 10% rather than 100% like Boeing was asking for. That's a huge relief because a lot of the US airlines have ordered some Airbus planes. They would have had to pay for that difference of price to pay the 100% tariff. So they have been putting pressure on the Trump administration to not put such a massive tariff on the planes. And also that means they will still order Airbus planes. Hopefully 10% is manageable. So for the future of Airbus, that's good. Also, a very crucial part is that aircraft parts and components are not on the list of tariffs. And first, they were rumored to be on there. And that's very important because Airbus has a final assembly line in the US, in Mobile, Alabama. And there they put together the A320neo, which is their bestseller plane. And so there were concerns of disruptions to their production there. And obviously, parts not being included in the tariff list, that's a great relief for Airbus. So that's why it's at the top of the CAC 40 today. Then, as you mentioned, leather goods are not included. Also, they were rumored to be there. But Hermes, LVMH, carrying bags and shoes and all those luxury items are not going to be hit, at least at the moment. French cheese is not on the list. Greek cheese, Italian cheese there, not French cheese. So that's also an interesting element. As you said, champagne, not there. Spirits are not there. Cognac is a very big market in the US, number one consumer of cognac. So a bit of a relief here for Pernod Ricard and some of these companies as well. The one painful bit for the French economy is wine, and wine will have a 20% tariff. And wine is a big industry, a big sector for the French economy. The US is their main exporting market. It's about 500,000 jobs and related jobs in France, so that could have an impact. So this could be, it's about 17% of the world production. made in France and that go to the US, is the second largest exporting industry, as I just mentioned. Behind, you guessed it, the aerospace industry. So it all comes together. So one could be an element to deal with for the French government, also socially, politically, something that can do a bit of damage. But when it comes to the French stocks, however, great relief for those French companies. The tariffs so far are not that bad.
So far they're not that bad. I mean, do we have an understanding of what the strategy could be here, given that it looks like it could be a lot more severe for France and the fact that President Trump and the administration decided not to go ahead with targeting things like leather goods and more important parts of the supply chain for the aircraft makers?
Well, maybe President Macron got into his ear, the G7, who knows? Maybe it's part of the strategy that President Trump having the rhetoric of we are putting tariffs on European companies, but actually they didn't go for the hardest bit, for the most painful ones for Europe, at least for the French companies. So, hit first and then talk after, especially that we know that the case against Boeing is coming soon in about 6 months. So maybe it's more of a symbolic move, but they didn't go for the jugular just yet.
So we're very much developing a story. Thank you very much, Charlotte, for weighing in there. That's Charlotte Reed, our French correspondent, joining us. Well, let's take a look at auto stocks this morning and see how we are trading. Those are the auto suppliers. Michelin down about 1.05%, Valeo down about 0.6%, and Faurecia also down about 1.2%. Now, this follows some pretty steep losses in the auto sector yesterday on Wall Street. Bear in mind, German markets are closed today, so we're not going to get much of a reaction from the key German automakers. But important to bear in mind that at the moment, the auto sector has been spared from this tariff list that was put together last night by the Trump administration, but it doesn't exclude them from potentially being included further down the line. So to weigh in on this topic, Angus Tweedy, Vice President and Analyst, Auto and Auto Parts Team at Citi Research, now joins me around the desk. So thanks a lot for coming here. So this morning, your sector has been spared, let's say, in terms of the tariffs, but it's not necessarily the end of the road when it comes to US-EU trade tensions. So how do you think about the risk of the auto sector coming into play here and European autos getting slapped with tariffs from the US down the line?
Absolutely a key question here. We've seen a deferral of the tariff decision for 180 days back in May. We're expecting an update in mid-November. I think last time I was on, we were saying this really is a material cut to earnings for these stocks.
Well, just hang on one second there, Angus. I just want to bring our viewers a line we're getting from the WTO. The WTO will hold a special dispute settlement body at the U.S. request on October 14th to adopt the arbitration decision in Airbus subsidies case. So that is from a WTO spokesperson. October 14th is the date you need to watch. Let's get back to Angus, our auto specialist, who's with us. Now, another topic, you say tariffs is clearly on the minds of the investment community. The slowdown we've seen in China in the auto space is another topic that we've come across a lot. Just yesterday, we spoke to the Covestro CEO, Markus Stielmann, who said that the weakness in China they're seeing in the auto end markets has been a real hindrance for that company. What's your take based on the data you track and the companies you speak to around the situation in China at the moment with autos?
I mean, what we're hearing, certainly from some of the suppliers, is they're looking at production down 6% on a global basis through to May 2020. On China, we're still not seeing a rebound on easy comps, though. We're still expecting October to be down more than 10%. And it feels like probably the secondary effects of tariffs and trade war are starting to play out in that market.
Now, I saw from your latest research that the bigger question in your mind for the sector is around inventory build. What's going on with German auto inventories at the moment, and should investors be worried?
I mean, when we look at the inventory levels as a percentage of industrial sales for the auto sector, it's standing at levels we haven't seen since 2009, which is clearly quite a terrifying statistic. I mean, there are a few moving parts in that, product cycles, etc. However, it feels like that there needs to be a big destocking here, and we are seeing it in the PMI data that you were showing earlier.
So just a quick line on your overall take on the European auto sector at the moment. Should investors be putting their money here?
we're still very concerned that we're going to see further earnings downgrades coming through. We think these inventories do point to big problems mounting into the fourth quarter.
All right, very clear, albeit somewhat downbeat, near term anyway. Angus Tweedy, Vice President and Analyst, Auto and Auto Parts Team from Citi Research. Well, we're going to take a quick break, but coming up on the show, problematic points. A careful response from the European Union after the British Prime Minister makes his final Brexit offer.
There's golf. And there's the golf lifestyle. UWE Bristol thinks your child's next step should be an exciting one, and that it should start right here on this Thursday morning, when you register them for our open day. Then, on the 5th of October, in just 2 days, they'll come and discover that UWE Bristol gives them more than a university with state-of-the-art facilities, more than academic support to help them thrive, more than real-world connections with practical experiences that complement their studies, and more than a city with the buzz of Bristol. Help them choose more than a degree. Choose a 360-degree experience. To register them for an open day, search UWE Bristol today. After that, anything is possible.
Did you know Carphone Warehouse does business? That's why we understand how hard it is to go from this to this. But when you switch to the Samsung Galaxy S10 smartphone with O2, you don't have to. It's packed with features to help you stay on track on the move. So, if you want to end your summer feeling like this and not this, switch and save today with O2 and get the Samsung Galaxy S10 with 60 gigabytes of data for only £43 per month. Visit your nearest store or go online at business.carphonewarehouse.com/switch and save.
At Argos, save 25% off homewares across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends 8th of October. Conditions apply. Subject to availability, selected lines.
The relaxing sound of fresh, cold running water. And you can have it in your kitchen.
With amazing savings on Samsung fridge freezers at Currys PC World, like the RB31 with its chilled water dispenser for only $399. Or upgrade to the Samsung RS8000 American-style fridge freezer with water and ice dispenser.
A huge 609 litres of storage space.
At just $1,049. How relaxing. At Currys PC World. Energy rating A+. T's and C's apply.
You're a small business owner and there's nothing small about what you do. That's why Dell Small Business Technology Advisors give you trusted advice and tailored tech solutions, like computers with Intel Core processors, servers, storage and networking, plus industry-leading monitors and software. No matter your technology needs, Dell is here to help your small business do big things. Call 0800 085 4878 to speak with an advisor today. That's 0800 085 4878.
Welcome back to Street Signs. A compromise. That's what British Prime Minister Boris Johnson is calling his new Brexit proposal, which he laid out in a 4-page letter to the EU. The plan gets rid of the backstop and replaces it with an all-Ireland regulatory zone and electronic customs checks away from the border. Following a phone call between the Prime Minister, European Commission President Jean-Claude Juncker welcomed the, quote, positive advances, but also noted problematic points. Now, Willem joins us live from Brussels. Willem, a number of complicated stories affecting the region this morning on Brexit. We finally got this new proposal from the Prime Minister. What could prevent the EU from agreeing to this new deal?
Well, the question is going to be whether the proposal as tabled yesterday here in Brussels meets the very clear guidelines and requirements they've laid out now for quite some time on the situation between the UK and Ireland. And based on what we've heard so far from the European side, it doesn't necessarily do that just yet. Here's Michel Barnier, the man that will be tasked with negotiating the details with his UK counterparts.
There is progress, but to be frank, a lot of work still need to be done to reach and to fulfill the 3 objectives of the backstop: no border, all Ireland economy, and protecting the single market. That means protecting the consumer, the citizens and the businesses inside the single market, the 27 member states. The no deal will never be the choice of the EU, never. So we will continue to reach a deal and to work with the UK team.
Of course, the European Commission and European member states are one of the constituencies that the Prime Minister has to look to in order to get a deal done between now and October 31st, Juliana. The other, of course, is the political establishment back in the UK. And Nicola Sturgeon, I note, the head of the Scottish National Party, said that she thought this plan was, quote, designed to fail. And there's obviously going to be large numbers of her MPs, lawmakers inside the House of Commons in Westminster who will agree with that sentiment, and no doubt quite a few Labour members as well. So the challenge for Boris Johnson is not only to get the Europeans to sign up to some of these very, very different ideas that he's put forward just yesterday afternoon, but if indeed they do sign up and there is a compromise reached involving both parties, whether there's then going to be enough support in the House of Commons, where, let's not forget, he does not hold a stable majority.
Willem, thank you very much for breaking it down for us. That's Willem, who's joining us live from Brussels. Well, let's take a look at sterling. Sterling is currently flat versus the dollar around 123, but it is higher than where we were yesterday. Earlier this morning, we had seen sterling dip into negative territory for the session, but it has recovered, as you can see there, and we are expecting to hear from Boris Johnson. Well, the House of Commons, anyway, is expecting to hear from him later this morning. So sterling around 123. Let's get back to our guest, Thanos Vamvikidis, global head of G10 FX Strategy, Bank of America, Merrill Lynch. Yesterday, sterling really relatively steady, given the drama that came through with the Prime Minister finally delivering this new proposal. Yes, we saw some swings here and there, but it's really been hovering around the 122 mark. What do you pin that down to?
There is still a lot of uncertainty. Definitely, we have seen some progress in recent weeks. This is why sterling was below 120 a few weeks ago. At least they are talking. At least there is a proposal in the table that the EU is willing to look at. All these are positive. But we are not really close to a deal, and there are still a lot of details to be decided. I think the next few days and few weeks are extremely important. Let's see if the EU is really willing to discuss this proposal in detail. Let's see if within the UK this proposal can have a majority in the Parliament. And I think if there is a serious discussion on this proposal, the question will be which of these details have to be finalized now and which ones we can leave during the long transition period that we have ahead of us. Now, when we had the all UK backstop, a lot of these details, we didn't need to discuss them. Now that the UK has come up with an alternative proposal, all these details have come to the fore, and there are a lot of questions that need to be addressed.
And the fact that the Prime Minister has really zeroed in on this one aspect of the deal, the backstop, and has sort of dropped the other sort of issues that he saw with the deal. In terms of the timeline here, if we do end up looking at an extension to the Brexit deadline out to January 2020, does that mean that sterling stays range bound through that point?
Now, one can argue that in the short term, an extension could be positive. You avoid for now the worst case scenario, which is a no deal. But as we saw what happened back in March, the rally was not really sustained as long as the uncertainties remain. But I think it's important to note that we are coming to the end game here. Either we get a final answer by the end of this month or by the end of January. So one or another, both sides, they will have to decide on the issues involved.
It feels as though we've thought we were nearing the end game numerous times before. Just quickly on investor positioning, how are traders and investors positioned when it comes to sterling at this point?
Actually, when you look at positioning, it really reflects these uncertainties, is broadly neutral. We have seen some demand for sterling very recently, given that the two sides have started talking, but not enough to really change positioning. And when you look at the levels, we are at the middle of the possible range. So the FX market is effectively telling us it's a 50-50 chance.
All right, so fairly neutral at this point, given the uncertainty. That would make sense. Stay with us. Thanos Vamvikidis, Global Head of G10 FX Strategy, Bank of America. Coming up on the show, Libra members attend a meeting in D.C. amid scrutiny from regulators. We'll discuss more next.
You have a full full-time job and commitments to keep, you're also determined to advance your career. Welcome to Coursera, career accelerating degrees online from the world's best universities for today's busy lives.
I just wanted my kids to know that you don't ever stop.
Get a high-quality degree 100% online, often for as little as half the cost.
It's allowed me to end up in a position that I was only really dreaming of.
Join Coursera for free at Coursera.org and try a degree course today. Coursera, your course to success.
Looks like you're not sleeping well.
Yeah. How did you know? Megan!
What? Hey, you're that guy.
The My Pillow guy.
That's right, and I'm here to help you get the best sleep of your lives. Oh, you have a down pillow. Here's the problem with down pillows. You lay there, you feel comfortable, and guess what? It goes down, and you got one bent neck. So this pillow's no good, and I see you're sleeping on memory foam.
Right.
Well, I'll show you what's wrong with that idea.
Okay.
Sleep's all about too high or too low, and I'm going to show you where your comfort level would be.
So, that feels better.
Right, that's better, but I'm not going to sit and hold this all day. So every morning you're getting up like, it's not good. Just like all of you out there, I had problems sleeping. I had tried every pillow out there, and none of them worked. That's why I invented My Pillow. My patented fill adjusts to your exact individual needs and helps keep your neck aligned. My Pillow will hold its shape all night long, regardless of your sleep position, for the best sleep of your life.
It feels great to wake up in the morning and feel well rested. It's shocking to me that a pillow could make this big of a difference in my life.
I make all my pillows in my home state of Minnesota, and I back them with my 60-day money-back guarantee. My Pillow has a 10-year warranty, and it's machine washable and dryable. Sleep is one of the most important things to your health, and My Pillow is one of the most important things to your sleep.
Call or go online to order My Pillow Premium, and Mike will give you a second pillow absolutely free. Use the promo code on your screen to get 2 My Pillows for the price of 1. Don't delay. Order now.
You're sleeping better.
Much better.
And you're looking good.
Feeling good.
I knew you would.
For the best night's sleep in the whole wide world, visit mypillow.com.
Recession fears, market sell-off. Today, survival strategies for investors. Smart moves ahead of the bell. Squawk on the Street, 9 a.m. Eastern.
Welcome back to Street Signs. I'm Juliana Tattlebaum, and these are your headlines. The global sell-off loses steam with only the FTSE in the red after Wall Street logs its biggest one-day decline in nearly 6 weeks. The U.S. threatens the EU with tariffs, widening the trade war after the WTO gives Washington the right to put levies on $7.5 billion worth of European goods in a long-awaited case.
All of those countries were ripping off the United States for many years. They know that I'm wise to it. We've had a lot of wins. This was a $7 billion win. Not bad.
But French stocks breathe a sigh of relief. Airbus rebounds while luxury brands like LVMH trade higher as Washington spares champagne and leather goods. And UK Prime Minister Boris Johnson makes his final Brexit pitch, offering a compromise on the contentious Irish backstop. But the proposal receives a tepid response from Brussels.
There is progress, but to be frank, a lot of work still need to be done to reach and to fulfill the 3 objectives of the backstop.
Well, we've got some more data just crossing the wires now, this time from the UK. We've got the services PMI, the final number for September, coming in at 49.